The next part of the Forex jigsaw puzzle for me is the ability to interpret candlestick formations. Candlesticks were invented in the 18th century by Japanese rice traders, and they used them to be able to interpret the opening, closing, high and low price of rice in any given period of time. We use candlesticks the same now in the stock market and in Forex. In Dean's LMT handbook, he mentions 3 specific formations that he looks for, and one of his favorites is the pin bar. A pin bar, as you can see here, we have a number of them. A pin bar is defined by the wick of the candle has to be at least twice the length of the body. So this is a perfect example. What we look for with candlesticks, you cannot trade solely from candlesticks. If you were to do so, you would lose. What we're looking for is we are looking for areas at the end of moves where price may be about to change direction. We're looking for clues. So for example here, price has come up, moved sideways, tried again to go high. The pin bar has opened here. Price has then forced its way 50-60 pips higher before being forced back down again. Subsequently, price falls away. It was a good signal. Now here we have a bullish pin bar. Price has fallen all the way down a few hundred pips, and we now have an indication that price may well be about to go back up again. The way we use pin bars for Forex traders is that we would place our stop below the point of the pin bar, and on this occasion we would have moved up 200 pips back up to the top. When we've arrived here again, price once again has attempted to burst through this upper area. As with previous videos on support and resistance, we would have been expecting something to happen and react in this area because it happened twice, 3 times before. Price has come up, touched an area of resistance, and lo and behold, it's moved away again, 300 pips on this occasion. So, candlesticks do give clues and on occasion appear to work brilliantly, but as I say, if you use them constantly, you will lose. Here, on the British Pound weekly chart, we have another example of a pin bar. And again, price came all the way up with this major move from the 13680 area up to 1680 area. And then price here, this particular candle formation is known as a shooting star, because what has happened here, this pin bar actually opened higher than the close of this candle. Price has then attempted to move up 100, 150 pips, and it did do, before then falling away and closing below its open. And as I say, this is known as a shooting star formation, which again is a bearish sign. Here, price again has come back up, and what's obviously happening here again, we now have upper resistance. This candle formation is known as an engulfing candle, and this is the second of the candles that Dean specifically suggests you look for. The definition of an engulfing candle is that this candle opens higher than this candle. Now it's not clear here, but believe me when I tell you that this candle opened 10 pips higher than this one. The body of this candle then completely engulfs the body of this candle. An engulfing candle does not take into account the wicks. We are purely looking at the body. So the body of this candle is now completely engulfing this one. We now expect price to fall away. And bearing in mind that we've bounced off upper resistance again, we would have had further confirmation. On to the Euro USD. Here we have some further examples. We have again a bullish pin bar. We have another example of an engulfing candle I just shown you. So again, this candle opened higher than the bullish candle. It's completely engulfed the price here, and lo and behold, price moved away again. Here we have a variation. This is a candle that both Dean and I do use in a different method. This is known as an inner bar. Inside bar, inner bar. All these candles have got loads of different names. But the important thing that you need to know, what happens here, this candle has opened and closed within the shadow of this candle. And again, this is an indication at the end of a move that price is likely to move away. Again, here we have another inside bar. So again, the price has opened and closed within this particular candle. moving further along, we almost have an inside bar here. This particular candle formation, were they identical, would be known as a tram track, and again is another thing that we would look for change of direction. Finally, we have another engulfing candle, this time a bullish one, where this candle completely engulfs that candle. The third candle that Dean recommends that we look for is a doji candle, and a doji candle is a form of an indecision. This is one slight problem I found with using black backgrounds for charts. If you'll notice here, there is a gap, and this is either a fault on MetaTrader, which occasionally they do get, but it is more likely to be that there is a doji candle. And what you will have to do to double check is right click, properties, background color, and change the color to a lighter color. And lo and behold, there we have, that is a classic doji. Price opened here and either went down or up and then closed in exactly the same place. This is a major indecision. There is a further example of a doji a little further back. Here we go again. This is a gravestone doji. This is a more distinct bearish reversal candle. Again, dojis, as with any kind of candle, you can't trade them just on their own, but they are an indication of indecision. And particularly if we look in this area, this was where we had the doji candle. We also, let's make this a little bigger, we have a spinning top. Price is opening, closing within a very small area. These are areas of indecision. And again, we have more spinning tops here. We have a reversal candle pin bar here, more spinning tops. So at this point, price had hit an area of major indecision. And as it was around the 1700 area on the USD Swissy in April 2009. So all the way along here, we have indecision. And a reversal candle again, finally price falls away. So, as I say, a doji, to me, a doji is an indication of indecision. I don't personally trade off them on their own. If there are 2 or 3 dojis together at the end of a big move like here, so you had a big movement up here, and there were 2 or 3 dojis together, then yes, I would certainly be looking to short. And along this area here, all the way along here, you would have been looking for indications to short because of the fact, as I said, it was the 1.1700 area, which was a huge psychological range for the Swissy. So, in summary, candles are another indication of where price may be about to change. You cannot use them on their own, and you need to. There are books on the subject. Steve Nielsen is the accepted master for the subject. Every time I read the book, I fall asleep, which is not intended as disrespectful to him, but in my way of trading, I think that you only need to learn half a dozen or so. If you wish to master on the subject later on, then that is an option. At the moment, what we're trying to do is to get you into profit. And with this limited knowledge, all you need to start to do now is to look at the end of every candle close. If you're trading off the daily, this will be so simple, because at the end of the day, you look at the candle. You could even have the book that we will supply you with to sit there and have a look through and say what that candle is supposed to be, and then just use that as part of the decision-making process. So if the LMT has given a sell signal in a downtrend, and there is a reversal bar suggesting the same, on top of support and resistance and all the other things that we looked at, then that would just be the final bit of confirmation that you would need.